Imagine a regular Tuesday. You are scrolling through your phone over morning coffee. And suddenly, a notification. Just one. But the kind that makes your heart skip a beat for a second. SpaceX announced it is going public. A second later, a message from a friend, "Are you buying yet? This is the next Apple." Then another one. And another. The whole chat is blowing up. You open the brokerage app. The stock is $500. And one thought is spinning in your head, this is Musk. These are rockets. How can this possibly go down? Stop. It is precisely in this second, when everything seems obvious, that most people lose their money. Hello, I am Wicks. And today we are going to break down one of the hottest financial topics of recent years. Why buying SpaceX shares at the IPO is not as simple an idea as it seems. No panic. No complex terms. Just honestly, human to human. And at the end, a specific plan, what to do if you still want to participate. But first, a little secret about IPOs that Wall Street prefers not to advertise. Most people think that an IPO is a holiday for everyone. Like, the company finally opens up for ordinary investors. Democracy of capital. Equal chances. I want to upset you. This is not true. An IPO is like a party. But you were invited last. Let's break down who comes first. The insiders sit at the table first. Founders, early employees, venture funds. They bought their shares 10 years ago for $10, $20, $50. When the IPO announces a price of $500, they have already made their 10x's. For them, this is an exit. The second to arrive are large institutional investors. Banks, hedge funds, pension funds. They get shares even before trading opens. At the offering price. Usually it is 15 to 30% lower than the price you see. And finally, the third guest. That is you, the retail investor. You enter the hall when everyone has already eaten, poured champagne, and is quietly looking towards the exit. And you are the one who gets the bill. The system is not broken. It works exactly as intended. Just not for you. Okay, you will say. But SpaceX is a different story, right? Rockets. Starlink. Flights to Mars. NASA contracts. Let's test this idea with numbers. Imagine that you go to the market to buy an apple. The apple is beautiful. Ripe. Everyone around says it is delicious. But the seller asks for it as much as the whole apple orchard costs. This is roughly what the situation with SpaceX at the IPO looks like. At the end of 2024, SpaceX was valued at about $350 billion on the private market. At the public offering, this figure will likely grow to $500 to $700 billion. For comparison, Boeing is worth about $100 billion. Airbus about $120. SpaceX at the IPO could cost more than Boeing and Airbus combined. A company that has never traded on an exchange more expensive than the entire global aviation industry. This does not mean that SpaceX is a bad company. Not at all. This means that all your future expectations, Mars, Starlink, interplanetary flights, are already priced in. You are not paying for what exists today. You are paying for what should happen in 20 years. And that is a completely different conversation. But let's dig deeper. Because there are 4 more specific risks that almost no one talks about. Risk 1, one-man show. Tell me honestly, are you investing in a company or in one person? Because SpaceX without Elon Musk is a completely different story. Remember the year 2022. Tesla lost 65% of its value. Not because of bad cars. Largely because Musk was busy buying Twitter. The market was nervous. What if he gets distracted? What if he says the wrong thing on social networks? Now imagine the same thing with SpaceX. Only the stakes are higher. After the IPO, Musk will retain control through a special structure of voting shares. You will be a minority shareholder. Your vote means nothing. One tweet, one decision, one scandal, and your $500 turn into $250. Are you ready to bet your savings on the health, attention, and mood of one person? Risk 2, Starlink sounds beautiful, but the whole story about SpaceX rests on one word, Starlink. Global internet from space. For 100 million households around the world. Sounds like a monopoly. Sounds like a printing press. But here is what is happening right now, while we are talking. Amazon is launching Project Kuiper, thousands of its own satellites. OneWeb is already working. The Chinese state-owned SatNet is building its network. Do you know what happens when competition enters the industry? Prices fall. Margins squeeze. There is not one winner, there are many. We have already seen this with solar panels, with electric cars, with streaming. Netflix seemed invincible until Disney+, HBO, and 20 other services appeared. Starlink is unique today. But uniqueness is the most perishable asset in technology. Risk 3, government contracts are not what they seem. Okay, but SpaceX gets billions from NASA and the Pentagon, right? This is stability. This is the government. Yes, it is stability. But it is also dependence. One changed contract. One political scandal. One plane crash with casualties. And the revenue that analysts were counting on disappears. We have already seen this with Boeing. The company seemed unsinkable for decades. Then, 2 crashes, a scandal with the regulator, and the stock falls 70% from its peak. Government contracts are not insurance. It is just another type of risk that is harder to calculate. Risk 4, rockets are literally burning money. And the last thing few people think about at the word SpaceX. Launching a rocket costs from $50 to $150 million. Starship, the new super rocket ship, cost billions in development. And every time something goes wrong, it is not just a failure. It is literally burned money of investors. SpaceX is one of the few companies in the world where the word explosion in corporate news is normal. Planned destruction, that is what they call it. Beautiful, isn't it? For research, this is normal. For a public company with shareholders, it is nerves and volatility. You must understand what you are getting into. Wait. You have read all these risks. And still, somewhere inside there is a voice. Well, but it is SpaceX. I understand you. I am exactly the same. And here is the thing, this voice is not logic. It is psychology. And it works against your wallet. Let's break down 3 thinking traps we all fall into during hot IPOs. Trap 1, the story is too good. Rockets. Mars. Humanity in space. The more beautiful the story, the worse the investment. Why? Because you are paying for a dream. And a dream is not cash flow. A dream does not pay you dividends. Remember WeWork? Their founder said, "We don't rent desks. We elevate the world's consciousness." The IPO failed. The company lost 95% of its value. The grander the narrative, the more skepticism is needed. Trap 2, FOMO, fear of missing out. Your brain says, if I don't buy now, in a year I will regret it. This is called FOMO. And this is one of the most expensive emotional baggages in investing. Here is what you need to remember, you have no deadline. If SpaceX is truly a great business, it will remain great in half a year. If not, you just saved your money while others panicked. FOMO is when you jump on a train without knowing where it is going. A smart investor looks at the schedule first. Trap 3, Musk's halo effect. Tesla grew 10 times. So, everything Musk touches turns to gold? This is called the halo effect. Success in one thing makes us think the person is infallible everywhere. But let's remember the whole picture. Musk sold Zip2 and X.com. Good. The boring company has been losing money for years. Twitter became X and lost half of its advertisers in the first year. Even Tesla, in 2022, the stock fell from $1,000 to $150. Selective memory is your enemy. The brain remembers victories. It hushes up defeats. Musk is a brilliant visionary. But that doesn't automatically make every company of his a good investment. Enough psychology. Let's take a calculator. Suppose SpaceX goes public with a valuation of $600 billion. You invest $10,000. You want to double your money in 10 years. A modest goal, right? Just 2 X's. For this, in 10 years, SpaceX must be worth $1,200 billion. For comparison, Apple took 45 years to reach $3 trillion. SpaceX must do this twice as fast. From scratch. On the public market. Is it possible? Theoretically, yes. Is it probable? That is another question. Now let's look at Starlink, the main source of optimism. Let's assume Starlink captures 5% of the global internet market. This is an optimistic but realistic figure. With an average revenue of $100 per user per month, we get about $18 billion in revenue per year. With a market multiple of 20 to revenue, that is a valuation of $360 billion. Wait, but we started with $600 billion at the IPO. That means even in a good scenario for Starlink, the shares could trade below the IPO price. This is not a disaster. It is just mathematics. And the last comparison I want to show you. $10,000 invested in the S&P 500 index fund in 1980. Today that is $760,000. Without Musk, without rockets, without stress, without a single tweet that crashes the portfolio. Just a boring, predictable, nameless index fund. This does not mean that you should only invest in indexes. This means, before chasing a story, make sure you have a foundation. Okay, Wick, you convinced me. The risks are high. But I still want to be a part of this story. What should I do? I understand you. And I have a plan. Not never buy. But buy smartly, not on emotions. Step 1. Wait 3 to 6 months after the IPO. Insiders have a lockup period, usually 180 days, when they cannot sell shares. When this period ends, they sell. A lot. Fast. The stock usually drops. Sometimes significantly. This is your chance to buy the same company cheaper than on IPO day. Patience is also an investment strategy. Step 2. The 5% rule. Even if you are confident in SpaceX, do not invest more than 5% of your portfolio. I call this the rocket fuel rule. A small bet on a high-risk idea is fine. This is your chance for a big upside. But if the rocket explodes, you will not lose everything. Only 5%. The remaining 95% work for you without risk. Step 3. Check your motives. Ask yourself one question. Honestly. If it were a gray, boring company producing bolts with the same financials, would I buy it? If the answer is no, then you are paying for the brand and the story, not for the business. This is not always bad. But you must be aware of it. Step 4. Read the IPO prospectus, not TikTok. When a company goes public, it is obliged to publish a document, a prospectus. Everything is written there in black and white: risks, debts, competitors, lawsuits. Everything that financial bloggers do not talk about. Boring? Yes. Important? Very. It literally says there, we can lose money. We depend on one person. Our rockets sometimes explode. Do not trust the hype. Trust the documents. Step 5. Automate the foundation. While you are thinking about SpaceX, make sure your index fund is replenished automatically. Every month. A small amount. Without emotions. Without decisions. This is your financial base. It does not scream. It does not flash in the news. But it is exactly what builds wealth while you are worrying about Musk's tweets. The hype around an IPO is noise. Automatic investments are music. I want to tell you a story. About two friends, Alex and Tom. Both heard about the SpaceX IPO on the same day. Alex immediately opened the app, bought $20,000 worth of shares on the first day of trading. This is the future, he wrote in the chat. Everyone gave it a like. Tom waited. Read the prospectus. Looked at the competitors. Waited 6 months. 6 months later the stock dropped 25%. Insiders were selling after the lockup. Tom bought the same shares, but 25% cheaper. With the same outcome in 10 years, Tom will have 25% more money. Not because he is smarter, but because he was in no hurry. Patience is not inaction. It is a strategy. Let me finish with one thought. The wealthiest people I know are not the ones who caught the next Apple. These are people who didn't lose money on hype, while everyone around was losing. They don't have Lamborghinis. They don't have a story about how they became millionaires in a year. But they have one superpower. They make financial decisions with a cool head, not because they don't feel FOMO, but because they learn to notice it and take a pause. A real investor is not someone who caught a rocket on takeoff. It is someone who didn't jump on board just because everyone around was screaming forward. SpaceX could become a great public company, but a great company and a great investment at any price are different things. Think slowly, invest boringly, get rich quietly. I am Wick, and subscribe to the Wicks Wealth channel